And while a U.S. military operation and the capture of Venezuela leader Nicolás Maduro is bringing mixed political reactions globally, from an economics perspective, U.S. President Donald Trump said oil producers will now invest huge sums to rebuild the crumbling oil infrastructure in Venezuela. However, the real question is, how will this change the oil supply dynamics in 2026? Oil futures do not trade until Monday, and traders are divided over whether there will be a spike or correction in the price of oil. Now, immediately after capturing Maduro, Trump described a grand plan to bring Venezuela's oil sector back to its glory days using American money and industry expertise. He envisioned U.S. oil giants repairing the country's severely damaged infrastructure and turning a profit.
We're going to have our very large United States oil companies, the biggest anywhere in the world, go in, spend billions of dollars, fix the badly broken infrastructure, the oil infrastructure, and start making money for the country.
But the plan faces multiple challenges. So low crude oil prices and large above ground risks are just a few of the obstacles that the plan to restore Venezuela's oil industry must overcome. It is also not clear whether oil giants like Exxon, Chevron, and ConocoPhillips will be willing to engage in a nation with murky fiscal and legal rules under a temporarily run U.S. recognized leader. Oil prices ended 2025 with the steepest annual loss since 2020, and the global benchmark has slumped towards $60 a barrel. Analysts say a shift away from long-standing sanctions and political isolation may eventually open Venezuela's huge reserves to broader export flows, though risks and geopolitical tensions remain high. Venezuela has the world's largest oil reserves, but only produces less than 1% of the world's oil at present. Estimates suggest Venezuela has roughly 300 billion barrels. That exceeds even Saudi Arabia's proven reserves. But years of sanctions, underinvestment, and infrastructure decay limit any immediate surge in output. Analysts and traders say repairing critical infrastructure and allowing oil to flow freely out of the country might take years. And according to Chief Economist Shane Oliver of AMP, who assists in the management of billions of funds for the superannuation giant, Trump appeared to be playing a long economic game here. He says, and I'm quoting, "It looks like a grab for oil, but it will take years to ramp production up again. Certainly longer than the U.S. midterm elections, so it's a bit confusing." Now, citing the country's involvement in Venezuela as an example for U.S. interference in foreign affairs for strategic purposes, Oliver said Maduro's bod grab was nothing new. He adds, "There's a history of the U.S. intervening in Central and South America to provide political distractions." Well, geopolitical tensions are back on the rise at the start of 2026. Apart from oil, the spotlight will also be on the dollar, often seen as a safe haven asset. The greenback just ended its worst year since 2017, and thus any reaction would be carefully watched. The capture of Maduro is expected to impact a range of asset classes, including gold and silver, given Venezuela's substantial gold and precious metal deposits. Among South American countries, Venezuela is reportedly the richest in gold, with 161 metric tons of reserves that might be worth over $22 billion at the current price.